Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it. And banking evolution is the main topic about which we were discussing in the previous lecture. Alright. So basically we are revising the facts and figures what we had already covered in the previous lecture along with some new facts and figures which we might missed in the previous lecture. Okay, like in the previous lecture, I had given you the example. Suppose it is you and that is your friend. Okay, and this is me. So if I'm asked about your friend, you could not tell me each and every detail of your friend in one single shot. Okay, it means that it might take some time to know everything about your friend. All right, that's why the same thing happens with the financial knowledge or the banking awareness. If you ask me, so tell me about banking awareness, tell me about banking evolution, tell me about this and that, then totally, to be very honest with you, I'm not able to tell you everything in just one single lecture. Okay, that's why we had a multiple lecture about banking awareness. Okay, and either we will revise the previous facts or we will learn new things. That is going to be the part of that particular series of the financial knowledge and the banking awareness. Okay, so I want you all please kindly pay your attention during the classes and also revise the facts and figures before you come for the another lecture. Okay, so let's with this note, let's start this lecture. So basically that is the index which we are going to cover is the more details on banking evolution in India. Okay, and even I will try to explain the thing or the things with you in more detail. Okay, might be there is something I missed out in the previous lecture. Okay, because I am also the human and this could be happened with us. Okay, that's why I will focus to explain you the concept and the things in a proper manner, or you can say in a more realistic or more comprehensive manner. All right, that is basically I'm going to do. So let's begin. So basically, when we start on the more details on the banking evolution in India, the evolution of banking sector in India is an important topic for the competitive exams, provides insight into the historical development of banking and financial institutions in the country. Like I had told you, suppose if you are looking at the bank sector and the Indian economy. So the Indian economy was not like today in the history time. We have been go through many stages, then we have come here. All right. For example, if you see the SBI, which stands for the State Bank of India, right? So the State Bank of India was not made in one single day. All right. It took the years from 1806 from the establishment of the first Bank of Bengal. Okay. So now you can see from 1806 to 1955, that much time has been taken by the SBI to be regarded as the SBI. Okay, similar thing also happened with the Indian banking economy. That's why it is a historical development of banking and financial institutions in the country. All right, and basically we are going to have a detailed overview on this sector for our competitive exams. All right, now begin. So the first is the early banking practices. All right, like as I had told you, during the ancient times, there was a beginning of banking activities in India, right? That was the beginning of the banking history. Okay, thereafter, even we had seen that basically there was a concept in the ancient time which stands for the exchange of animals and things in rate of credits. Now, what do you mean by it? So, let me tell you. Suppose there are two persons. That is one. This is one. Okay. So, if you required XY from me, okay, I had given you XY. Alright. You promised me that in return of XY, you will give me a better opportunity. Or means you promised me that you will give me some money or something else. Alright. But why should I believe you that you will return XY or you will give me something else in return of XY in the upcoming days? Why should I believe you? It means that you must give me something to keep your promise up. Alright? At least you should give me something that I could believe, okay, that person could give me. Okay? Otherwise, I will use that thing to recover my loss or my amount. Okay? And this is basically an example of collateral security. Okay? Like I had told you, collateral security is basically the guarantee that something will be, or you can say, maybe, not will be. It's like maybe to recover a certain amount in adverse cases. Okay, it's basically a guarantee. Like, suppose that is the person who took rupees 10,000 as a loan from the bank. That is the bank XYZ. Okay, so whenever you will go to the bank like that person and you ask for a loan, the bank will always ask you for collateral security. It means that the bank will ask you to give something to the bank equivalent to your price, to your loan amount or price, you can say. All right. It means that you have to submit something with the bank of worth rupees 10,000. Okay. That is the, you can say, motive of the collateral security. And if somehow you are not able to repay the amount, then collateral security will be sold off to recover amount. Okay. That is the main scenario basically. Okay. Similar things were in the ancient time we had. Okay. Now the question is, if for the ancient time we had this kind of practices in India, then what was basically submitted as a collateral security? Like in the modern terms, you can say that you could submit the gold, your property papers, okay, your shares and other things. But what was the main object on that time? To be submitted in lieu of your loan amount. So basically, if we talk about it, then that is cows, or you can say house animals. Because in the ancient time, the house animals are the main property of the houses. That's why they are oftenly kept as a collateral security whenever the loan has been taken out. Okay, it's just an example. So this kind of activities were basically prevailed in India during the ancient times. Okay, now I hope that you have got it. Early banking practices. Banking in ancient India was sophisticated and had unique features that distinguish it from banking practices in the other parts of the world. Okay, which means that suppose if ABC is the banking practices of the India. Okay, so it is the part of the banking sector, but its provisions are different from other countries like PYQ, or you can say like XYZ. Okay, that's why we can distinguish the Indian banking system with the foreign banking system of that time easily, because there is a difference between them. Okay, thereafter we are going to talk about the key aspects of the early banking practices. So the first is the indigenous banking system. Early banking in India was dominated by indigenous bankers and moneylenders who provided financial services to the local communities. These indigenous bankers were often trusted and respected members of the community. All right. So it's basically, if we talk about it, then the indigenous lenders means only the Indians were involved. Only the Indians were involved. Not like the later time when the Europeans were involved. All right. So this is the first step. Okay. Second step, often trusted and respected members of the community. What this mean? It means that they are mainly the zamindars or the landlords. Okay. Second, they are basically traders or merchants. Because these peoples are the lenders, it means that they must have capacity to lend loans. Okay, suppose you can take an example. This is A. Okay, this is B. All right. Thereafter, A reached B for rupees 10,000. Okay, even the A is offering rupees 25% as an interest if B pays him rupees 10,000 on loan. Okay, so in which scenario the B could pay the loan to the amount, or sorry, could give the loan to A only if B having the capacity. Okay, If B is only having rupees 5,000, then what do you think? Is B able to pay A rupees 10,000? No, that was the condition. Why? I said that the people who grant the loans are oftenly the rich members or of the place or village. Okay, so that's why they are often the landlords, or you can say they are often the merchants. All right, and that's why these are known as the indigenous bankers. Why? Because they are in the habit of lending loans and credit facilities. Okay, so we can say, suppose uh, this is the farmer. Okay, he is required to give 1/3 of his produce to government or the ruler of the time. Okay, but somehow he is not able to give the tax to government. All right, in this scenario, what they often do, they borrowed food or money from the zamindar or trader on periodic basis to repay their debt, to repair their amounts, and also even the family functions. They are used to borrow the money from the zamindars and the traders. Okay, that's the first thing. Indigenous banking system. Thereafter, the hundi system was one of the earliest form of banking. A hundi was a promissory note or a bill of exchange that facilitated trade and credit. It was widely used in the regions like Gujarat, Bengal for trade transactions. Okay, so basically we could say hundis are the bills of exchange. Okay, and as we know, in bills of exchange there are two parties. The first is the buyer, the second one is the seller, and there is a one additional party in between of them, which is known as the pay. Now, what is pay? The buyer is basically the payer, the seller is basically the recipient, and that's the system work. And how? Suppose the buyer has purchased something for rupees 10,000, but he didn't have the amount on that time. Okay, in this scenario, he will make a BP, which is known as bills payable. Okay, and similarly, the seller will make a bill, which is known as bills receivable. Okay, so the bills payable is basically indicates the amount which is to be paid, whereas the bills receivable is basically shows the amount which is to be get or accept. All right. Thereafter, what is the role of pay? Basically, the document which will be made by the buyer or the bills payable, and the document which is to be made by the bills receivable or the seller has to be arrived in front of the pay. Okay, so on the date of maturity date you could say. So now the question is, what do you mean by the maturity date? So basically, bills of exchange contain two types of debts. First is due date. Second is maturity date. What is the difference between them? Let's understand. Suppose you made a bill on 3 March. Okay. That you will make a payment on 31st March. This is basically the time period. Okay. So the 31st March is basically the last date. Alright. And thereafter, the 1st April will be the due date. Okay. And the 4th April will be the maturity date. Okay. Let's understand them. So basically, due date is the date on which the payment is to be made. Okay. In this scenario, the date was 1st April. Alright. Whereas maturity date, final date, which is given by, or you can say which is given to pay the amount after the due date, and generally comes after 3 dates of due date. Okay. It's like the 1st April is basically the due date. After 3 days, this is the maturity date. Okay. So the bills payable is basically due on the due date and it's to be paid anyhow on the maturity date. Beyond the maturity date, this will be a condition of defaulting the payment. Okay. So remember these points. Okay. So basically, on the due date, the bills receivable will be submitted to the payee, which is the bank of Mr. A, Mr. B. Okay. And then the bank will deduct the money from A's account and the money will be paid off to the B's account. That's how the bills of exchange work. Okay. First, it is drawn, or we could write down the steps to keep it in the mind. First, drawn by the buyer or payer to make the payment on certain days, on you can say on certain date, also called bills payable, right? Thereafter, second is rule that the payment could be made after due date or to be made within maturity date. Before the due date, you could not reach the bank to make the payment. Okay. Thereafter, the third point is that seller is basically the beneficiary who will receive the amount. Payee is basically the bank who will pay the amount on behalf of the client, and the buyer is basically the drawer who make the bills payable. Okay, so these are the important points about it. All right, and the foremost and the most important point is that the bills of exchange is transferable. It means that it could be transferred from one party to another party. Okay, for example, suppose this is A, this is B, this is C. A having rupees 10,000. Okay, sorry, A had purchased a product worth rupees 10,000 from B. Then he made a bills of exchange. Okay, whereas the B has to pay the C the same amount. So B could ask A that instead of paying B, the A could directly submit the bill to C so that B receives its payment. And settle off claims with C. Alright, so that's why it is known as the transferable, which means that it could be transferred from one party to another party. Alright, so guys, this is about the Hundi system, and this was mainly focused in the areas like the Gujarat and the Bengal. Alright, thereafter, the Sarafs and the Sharofs. Saraf and Sharof were individuals engaged in money changing and money lending activities, played a crucial role in facilitating trade and commerce by providing credit and foreign exchange services. So basically, if we talk about them, then they are basically known as the Saraf and Sharofs. And they are basically the money controlling businessmen. Alright? They basically grant loans to people on terms and conditions of not sorry on terms and conditions of getting collateral in report in return or putting heavy interest, because these are the private lenders, so they only focused on their maximum profit. That's why they often ask for the collateral from the person who's taking the loan, and even they charge the heavy interest on the individual. Okay, so this is about the Sharaf and Sarofs. So students, basically in this lecture we had covered the several facts and figures on the banking evolution. The similar figures we had already covered, but I hope that you have got a little bit revision. Please again revise all the facts and figures we have discussed here so that you find yourself able to understand the topics in the next lecture. With this note, let's end this lecture and thank you.